All right, welcome. In this video, I'm going to show you these powerful tools, how to get it, how to use it to have a hedge in trading to make money in the forex market, trading any asset class, whether gold, whether boom and crash, whether step index, whether currency pair like GBP, USD, Euro USD, any asset class of your choice. You're going to use it to make a lot of money. So you want to stick around to watch the video to the end and understand how it's being used, how you can use it to make a lot of money in the market. Without much ado, let's go into it. So welcome again. I am Oluwato Singh and I make videos, helpful videos in forex trading, helping people to have a hedge in trading. I do video regularly, make indicator availables, both free and paid. I build EA for people, and I offer account management service. So anyone that you are interested in, you can reach out to me and we're going to help you. So this indicator is based off two things. That's Elliott Wave and Fibonacci, and it's very important for you to understand how to use it. Whenever this whenever this indicator plots the graph, it is very important that you understand you can start taking your trade from 23.6 level. Yes, I mean it. When this plots the graph, that's why I say you want to stick around to understand, because some people, when they hear the Elliott Wave, the only thing that comes to their mind is probably to come and wait at the 78.6 level where they will take the trade, in this case after the three which will make the three impulse move, the third impulse move, because you can see that from A to B, you can see that we have only had this first impulse, this second impulse, according to the plotting, that then we'll be expecting the third impulse that will be longer than this second impulse. So that's what will be in the mind of many people. But you will understand that in this particular case, the 23.6 level is a good point for your entry, and I'll show you not just on step index in the index alone, not only on gold alone. I'll show you on any other asset class. Now in this case, when you plot the graph, what you want to do is that at the 23.6 level, you want to see when market reacted to the 26.6 level, close below this 23.6 level, then return back. This is very important. Not when the market touch the level then you take your trade. Wait for the market to close below the zone. Wait for the market to pull back. Then when the market pull back, then you take your trade. As the market continue the correction stuff, then you take your trade. In this case, this is when you take your trade after this pullback, which is this candle. Then this particular candle from the top of the 23.6 level that close below it, give you opportunity to enter the trade here. When it closes, then you can start taking your trade, and you can see make money. And the first take profit level, which is clear, is 38.2. the second take profit level is going to be the 50 level, and the third take profit level should be 61.8 based on the exit point. Now don't try and take your profit also at 78.6 level, because that's where you are probably going to wait for the reaction of the market to take a buy. Very important for you to know. Okay, so you are not looking at to actually enter a buy at any level at the top. You are looking at to take a buy from the 78.6 level, because that's the most discounted point of entry that you should be waiting for your entry, for a buy entry. That's why you can see that it has marked the level there as green. Okay, now you can put the same thing on any other asset class, which is, you can see now, this step index 500. So let's actually take the time frame and reduce it to 1 hour. The same thing that we said. Look at the same pattern. I want you to pay attention. The market came. Now see, market touched the zone but did not close below the zone. Then the next candle, all of them are doing as if they want to close below the zone. They did not, until we have the candle that closes below the zone, which is this. Then we have the next candle. Remember, you are waiting for a pullback. It will happen. It's happened. Then the candle closes below. Since the point of the candle that closes below to this level, let me show you the take profit level, the first take profit. If you take your trade from here, which is 7583, and you set your stop loss at 7640, that would be roughly, I'm talking about big stop loss in this case. You can see that the stop loss is big, wide enough, and the stop loss is around $60 or so. Yes, it should be around $60, because this is 80 to 40. Yes, 80 to 40, that will be $60. So let's call it $60, and let's look at the take profit. I mean, take profit one, not take profit two. From this point 758 to this point 7421. If you do the calculation, if my mathematics serve me very well, that will give you 160. Yes, do the calculation. 7580 to 7420. If you remove 420 from 580, you are going to have 160. So you have 160. You have a stop loss of $40. You have a take profit of $160. That is 1 to 4 weeks to reward. You don't have to set the stop loss more tighter. I'm just showing you. 1 to 4 weeks to reward is a massive one. $160 to make when you are risking just $40. If you go back to gold, the same thing with gold. You will notice that that's the same thing in the case of gold. Yeah, the stop loss and the first take profit. Massive. This is going to be your stop loss. You enter the trade from here. Your stop loss is going to be here, which is probably going to be this 22. You are entering at 16 because this is 16.88. But let's call it 16. It's supposed to be called 17, but let's call it 16. So you are entering at 16 and you are exiting at, you are sending your stop loss at 22. 16 and 22, that will give you 6. Then your take profit will be what? This is 3416 and this 3400. So let's call it 3400 for the first take profit. That is going to be 16. 6 to 16. That's almost 1 to 3 weeks to reward. I'm just showing you that even the first take profit level, not even take profit 2, is a massive one if you understand how to use this. You want to look at that entry for the sell, not for the buy. Very important for you. The sell, not the buy. Your first target is in the sell, not the buy. And when the wave is also the other way around, you will be looking at the buy at the 22.6 level, not pursuing the sell at that time. So, and when the market gets to 78.6, you want to take an opportunity of a buy in this case, and if it's the other way around, you want to take opportunity of a sell. So this indicator is accessible. If you want to get it, you can reach out to me, and all you're making is a commitment of $10. And a commitment of the $10 is in the sense that anytime you have any challenge, you'll be free to reach out to me because you paid. That you don't get it from me for free, so you will be free to ask any question. If it's free, you will not be able to ask me a question, and you yourself will not follow it. And I believe $10 as a form of commitment fee should not be a problem for you if you follow what I just show you. Okay, I'll see you again in the next video. Thank you.